Hello everyone, my name is Moe Zulfiqar and welcome to Income Investors. Today I thought I'd take some time and talk about interest rates and dividend stocks. I think this topic is worth talking about because interest rates have been volatile in central banks around the world and Federal Reserve have been raising them, and it could impact what happens to dividend stocks. But before I go into any details, I want to let you know that anything you hear in this video is for information and educational purposes only. Nothing in this video should be taken as personalized investment advice. No matter how safe an investment sounds, it comes with risk. To read more about it, please see the description below. First, let's talk a little bit about what's happening with interest rates. As inflation in the US started to creep higher, Federal Reserve decided that it's time to fight it. The way Federal Reserve fights inflation is by raising its benchmark interest rates, called the federal funds rate. The hope here is that Fed raises rates, it will impact other interest rates. In turn, it will cool down the overall economy and the inflation. Throughout 2022 and in early 2023, Fed raised its rates. The federal funds rate went from 0 all the way to 5% now. Just so you know, it's been one of the fastest paces of rate hike we've seen from the Fed. However, not too long ago, the Fed announced that it will pause raising rates. With this, there's a lot of noise if that's all for rate hikes and if we're closer to peak rates. And there's also noise about if there are rate cuts coming. In its own projections, Federal Reserve is saying that its benchmark interest rate will be lower in 2024 and 2025 than it is in 2023. With this said, now let's bring in dividend stocks. To begin with, the general convention among investors is that as interest rates increase, investors shift their focus towards fixed income investments like bonds because they now offer higher returns. And this could lead to lower demands for dividend stocks, resulting in decline in their prices. However, rarely this works. If I were to rephrase what happens to dividend stocks when interest rates rise, I'd just say it depends on what kind of dividend stocks an investor owns. First of all, know that not all dividend stocks are actually created equally. Some are highly reactive to interest rates, and some it doesn't really matter much. Let's look at real estate investment trusts, or REITs for short, for example. As interest rates have increased over the past year and a half, REITs' performance hasn't been that great. And this is mainly because the assets these REITs hold are extremely inversely correlated with interest rates. As interest rates go higher, real estate slows down, investors sell REITs to look for other opportunities. Now in contrast, if you look at companies like ExxonMobil, it's a solid dividend paying company and operates in the energy industry. Its stock has actually increased in value, and not too long ago it was trading at all-time high. This company is more reliant on what happens in the oil market than interest rates. Now, let's talk about what's ahead. We know at Income Investors that hindsight is always 20/20, but you make money trying to figure out what happens in coming months and quarters, not what has already happened. As I mentioned earlier, Fed is pausing its rates, and with their own projections, it could even be cutting soon. Assuming interest rate cuts are around the corner, this could have positive impacts on dividend-paying stocks. When interest rates rise, dividend stocks react differently, but when interest rates are coming down or are low, these stocks tend to do extremely well. And the reasoning behind this is very simple. When interest rates are low, fixed income investments, such as bonds, offer lower yields. This prompts investors to search for better options, and dividend stocks can help them. Dividend stocks with their regular dividend payments become a very attractive opportunity. When interest rates drop, companies often benefit from reduced borrowing costs. This can have positive impacts on their profitability and financial health, ultimately enabling them to even increase their dividend payments. There are several examples of this in recent history where dividend stocks were one of the best things to hold in portfolio for those looking to generate income. One of the greatest examples of this was the period between 2009 and 2021. Interest rates were essentially near zero, and dividend-paying stocks provided investors with consistent dividend and immense capital appreciation. I will end this video with some food for thought. Are we close to peak interest rates? If yes, is it time to start looking closely at dividend stocks? Let us know what you think in the comment section below. Friends, that's it for today. We'll be back with another video soon. Stay tuned, and in the meantime, don't forget to like this video, subscribe to our channel. Goodbye for now.